Well, I think new logo growth is key, right? I mean, that's ultimately we want to acquire businesses that show, potential to grow independently. So do they have an existing sales and marketing engine? Are they generating new logo? Are they retaining, new logos? I think is priority number one.
Welcome to another episode of M&A Insights, where we sit down with Kyle Eichenbaum, VP of Corporate Development at VC3. Headquartered in South Carolina and with strong roots in aerospace and defense and local government, VC3 has completed 14 acquisitions over the past 3 years through 2024 and has become a leader in managed IT services with over 1,100 municipal and 700 business clients. What are they looking for in an acquisition? How do they integrate and operate? What roles can founders play at VC3? And how is their platform different from those of others? Listen in to find out. But first, before we go any further, let's get some housekeeping out of the way. My name is Madhur Duggar. I work in the IT and software M&A space, and this is my podcast series, M&A Insights. If you are interested in having a conversation around the strategic direction of your firm, are looking to grow your book and want some marketing and business development help, or are an investor looking to make an acquisition in the space, write to me at podcastwithmadhur, that's MADHUR, @gmail.com, or reach out to me on LinkedIn. Kyle, tell us a little bit about VC3's background, kind of in terms of like what it's been doing over the past few years with regard to MSPs, and then also your role in that.
Sure. Would be happy to. So VC3 is a large North American MSP. We're a traditional MSP across 30 plus states and 8 provinces in Canada. Over the last 3 years, we've done about 14 acquisitions across both of those territories. And I oversee our corporate development function here. So really driving and leading the growth through acquisitions. I myself came from an acquisition that VC3 did about a year ago. VC3 acquired our MSP out here in Los Angeles. And now, going from seller to buyer in a matter of 12 months has been a fun journey and something I think that's relatable to talk to other potential sellers who are thinking about making that leap to a platform MSP in the near future.
Kyle, you came on board in this year? Early this year?
At the end of last year.
At the end of last year.
We're going into our 13th month in the VC3 platform.
Gotcha. And has VC3 been active in 24?
Yeah, so we did 2 acquisitions in 2024. We slowed down a little bit this year, given that we did 4 acquisitions in the back half of 2023. And so we are a full integrator. We integrate, we roll everything in. We believe there's a lot of value and power in one brand, centralizing certain things, and just from a client service delivery perspective. So 2024 was a bit of a slower year than we've had over those last, 2-3 years, because we were ingesting and integrating all of those other acquisitions.
Any differences in terms of the acquisitions that you made in 24 versus the earlier years?
I think definitely size. We expanded some of the geographical footprints of what we were looking at. I think where VC3 is a little bit different than your traditional platform rollup is we're heavily focused on local government and municipalities as a vertical. We believe in the power of verticalization. So with that comes certain key geographies we'd look to expand in to support that vertical. And the deals candidly in 2024 were on the smaller side of what we had done in prior years past, which I think is consistent with, right, probably a lot of the guests you've had and what the kind of market dynamics are at this time.
That is consistent. Yes, I've heard similar things from others as well. Yeah. Okay. And for the future, 2025, more of the same, you think? Or a little bit, maybe more of an active year, given that 2024 was an ingestion period for you?
The goal is to be more active. We expect to be more active. Q1 is shaping up to be quite active. I think, especially around this time of the year, at the end of the year, things kind of died down a little bit, right? We won't have anything closed this year, but the goal is to have a lot of activity in Q1. So we expect to be, to be out there and be involved and increase, the number we did from 2024 to 2025.
Mm-hmm. I know you talked about the vertical focus with respect to the municipalities. Anything else, or maybe you can expand on that, but anything else as well
Sure.
that you think distinguishes, VC3's platform from the other platforms that have been actively buying MSPs?
Great question. I think that's a key part of our vision, right, and our story is serving those who serve, and we think there's a large untapped, kind of underserved market in that local government municipal space. We like all things SLED, right, state, local, education, defense, and we continue to kind of tap that potential. So we're really focused on that. But at the same time, we still have a 50% revenue mix in the commercial side of the business. There's a lot of growth in financial services, professional service businesses, and there's a huge need there as well for cyber, to level up the cyber maturity, and we definitely want to be a part of that. So,
what attracts you to the municipality business?
Well, I think government's a great vertical, right? They don't go out of business. They stick to their budgets if you're a part of that budget. And I think, more importantly than that, right, it ties to, our values, based in South Carolina, started with humble roots. Our goal is to serve those who serve, and make sure that they're protected, right? Particularly in this, very dangerous cyber climate. So that's been one of our core values and one of our missions since we started, in the early 90s. And so I think there's the end customer of that, but then, we think at our size and our scale, there's very little competition focused on that as well, right? And then from an investment thesis perspective, having mapped, what that addressable market looks like, it's very intriguing and very compelling to be able to sit on the other side and talk to a potential seller, if we require them to roll equity, which we do, about what that potential upside could be given that huge addressable market.
It's a good point you make about the fact that the nature of the client is one that really brings efficiencies when you develop a level of scale and knowledge around the complexity of providing service to that client.
Absolutely.
And that becomes a differentiator for you. Let's talk a little bit about the type of business profile that you like when you see an MSP that comes to you. And I mean from that, not just the fact that they might be mini focused or not, but just like the overall mix, customer concentration and things like that you look for.
Sure, absolutely, yeah. And to clarify, they don't have to be municipal focused or government focused. It's definitely a plus. But we look for great businesses with great operators, right? And usually that means they have some level of operational maturity, and a great team with a great culture, right? And that means strong tenure, and strong customer retention. All of those things are really, really important, right? We do look at customer concentration, obviously from a risk management perspective, but retention is really important. What percentage of the revenue is of a recurring nature, of a traditional service recurring nature, versus the product side or one-time services.
Yeah, on the part about the recurring nature of the revenues, I've had people on the show say a month-to-month contract is not a recurring contract, right? Or a annual contract which has no termination fee associated with it is not a recurring contract. Right. Where are you guys on what is a recurring contract?
Yeah, I mean, if you have a 3-year agreement with a 30-day out, it's really a 30-day contract. So I think there's a compromise to be had with your customer base and a discussion to be had around why a commitment is required. Ideally, we want annual agreements or 3-year agreements with some sort of early termination or some sort of exit clause in there, right? I mean, I think when we have conversations with customers, it's about if we're providing cyber, we're providing IT, they want us to be on the cutting edge of that technology and be on the cutting edge of the service that we're providing to them, right? And I think there's a commitment we need to be able to continue to do that and continue to invest in all of the tools and the process and the technology to be able stay ahead of that curve, right? Because it's just so dynamic, right? Cyber isn't one point in time. It's ever evolving and changing, and so and we have to prove the value of that commitment every day and every interaction, right? And so that's something that we take to heart in our service delivery teams. But a business with 1-year agreements or 3-year agreements is certainly more attractive and more valuable than a business without. Right?
Yeah, absolutely.
So
let me ask you a slightly more difficult question.
Sure.
2 choices, right? Long relationship with the client, but month to month, versus new relationship with the client, but 1 year with termination fee.
Yeah, I think that's a great question. I think that we're ultimately buying the customer relationships, right? And the people that service those relationships. And so I think the relationship is really important. But there is, again, assuming revenue level is the same, or the MRRs or the fees are the same. I'm glad we don't have to make a decision that's black or white based around that. But it's important to have long-standing relationships, right? When you talk about tenure, customer tenure, even staff tenure, those are things that go to the culture of the business and also level up the maturity of that business, right?
I agree. And I do think that amongst the smaller MSPs, it is not uncommon to find long relationships with one client, that you've had for a period of time. But the MSA contract itself might not be the strongest, and from the letter perspective. So I wanted to ask you that question because I think it's relevant for people to hear.
And I think that that's an indicator. Sorry to interrupt you, but that's an indicator of the relationship, the strength of the relationship, right? So I think that's definitely a positive. It's not only viewed as a negative.
Yeah. Okay. So recurring revenue, big deal. Customer concentration, obviously nobody likes it, but I feel what I heard from you there is we are more worried about recurring revenue, and customer concentration we might be willing to absorb. I'm not putting words in your mouth, but what do you think? Yeah.
I think there's a level of risk, right, that we could absorb. I think we do a deep customer concentration analysis. I think if there's a large customer making up, double-digit percent, we certainly want to dig a little bit deeper into that in terms of diligence and the support history, and really understand, that relationship a little bit more because of the inherent risk involved in that. But overall, I mean, they're both important. There's a variety of factors that go into it. If a lot of the indicators surrounding that customer or the other customers are positive, the financial performance, the employee tenure, and the culture, where we feel we can mitigate that risk a little bit more, right? So it's not necessarily a deal breaker,
right?
But it is something we would pay special attention to.
Yeah. Is that something you might tackle through the deal structure itself? So like if there's customer concentration, maybe there is a larger component of an earnout, for example, or which is conditional on the customer getting retained. I don't know.
Sure. Yeah. Some sort of renewal possibly, right? Around that. It would definitely be a consideration.
Right.
To be honest, we try and, stay away from some of those deferred agreements, deferred compensation, deferred structures. I think in the best interest of the buyer and the seller coming to the table with some clarity, right, and vested interest in moving forward together, we're big believers in that.
That makes sense. And I think you're right. Everybody prefers not to have that uncertainty hanging around. I completely agree. Better to have it nice and clean in the front. Okay. Let's talk a little bit about, we talked about recurring revenues, talked a little bit about customer concentration. How about upselling ability, right, to the existing clients and net new logo acquisition? So like getting into the sort of sales and marketing aspects, right? What are your thoughts there in terms of level of priority you give to those aspects of the business?
Well, I think new logo growth is key, right? I mean, that's ultimately we want to acquire businesses that show potential to grow independently. So do they have an existing sales and marketing engine? Are they generating new logo? Are they retaining new logos? Are they retaining those new logos? I think is priority number one, right? Or we want to buy a growing business, and that's where I think the most value can be extracted if you have an independently generating new logo business. So that would be number one. It's super important, right? To kind of transition, and in a lot of the smaller MSPs, you have principal led selling, which is a really common thing, and I think you can be really successful at that. But at scale, right, and for companies that we would look to be investing in and partnering within for growth and for the future, we'd want to see some dedicated sales and marketing resources in there that are performing.
Yeah. Another question that I've often wondered is if you had two companies, one where the revenue was pretty flat, stable but flat, right? But it was run very efficiently, so margins were really solid, right? Versus another one which was growing, okay, but because of the growth and the investment required for the growth, the margins might not be that great because now you're right. What would you prefer?
Yeah, I think it depends on the level, but I think both could be intriguing stories to tell, right? When you dive deeper, I think we want to show growth. If we can correlate the growth to the investment in sales and marketing, right, as part of the story, then that's certainly probably more. I guess maybe not certainly, but it's more intriguing. Whereas you have a long tenured, well run business with flat growth.
Right.
If it's able to continually spin off a solid EBITDA percentage, right, that's also worth something, because part of the value we bring to the table too with our fully integrated model is being able to level up sales and marketing. So we have a large sales footprint across North America, and so we can add capacity there, right? And we want to ignite that asset as well. And so we would look at those as two different potential scenarios.
I think that
both valuable. Yeah,
it's a great point, and I agree with what you're saying. And I think that for the smaller MSPs or even the medium-sized MSPs, it's the sales and marketing component where they struggle, And so I think that the profile of a stable company may not have like stellar growth, but efficiently run. It might be more in their wheelhouse of core competency than the sales and marketing part, where they might not have the chops or not quite have figured out the strategy there.
I mean, we would want to see a business investing in sales and marketing. So has it bared its fruits yet? Possibly not, right? What does the pipeline look like? But we would definitely want to see a business acknowledging that it's worthy of that investment, right? And understanding what that means to the future value of the business.
That's great to hear. And so how should an MSP like market them when they want to tell this should all come out in their deck, in their sim, like when they're and in your interviews with them? Is that where that story comes out?
Yeah, I mean, right. There's numbers on paper, right, and numbers and slides that you can extract a financial story. But I think engaging with the key management, engaging with the seller, understanding what their vision is, what their core values are, what the culture is that they're building, and ultimately why are they here, right? What are they looking to achieve out of a potential transaction, right? What are they solving for, right? And I think that equation of what are they trying to solve for has a variety of different inputs, and is it does it equal us as the right buyer, or does it equal somebody else as the right buyer? Because there's probably a right buyer out there. It may not be us all the time, right? Like we acknowledge that, and our model may not work. But yeah, I think that would be really where you just engage and get that information from.
Yeah. Any minimum size threshold below which just the effort required to do a trade doesn't make sense?
Yeah, look, ideally we'd like to be above $1 million in EBITDA, right? I think kind of the standard target profile of a lot of the platform MSPs. But there's intriguing opportunities below that we've seen and we continue to look at that could add incredible value for all the stakeholders involved. So we like to say we're opportunistic. We like to keep our eyes on everything, although we're pretty deliberate about our approach. But also the market kind of dictates what's open and what's available.
Very fair.
Right. So
very fair. Yeah. I totally think so. I mean, there's an incredible amount of competition and lenses on the 1 million plus market, And I think that there are nuggets to be found below that. And as the MSPs that are below that are learning through these podcasts and through conferences what buyers are looking for, they're doing a better job of taking that smaller company and cutting out the rough edges from it to make it better aligned. So hopefully we'll see more of that come through in 2025. How long does it take for VC3 to go from getting that SIM to eventually closing a transaction?
I think every case is unique, depending on the data that you get. But I would say, the quality of the data is there, right? We can, formulate our valuation on it, and engage in some management discussions in a matter of a few weeks, right? And then you have discussions around an LOI, and if that requires some further negotiating. A lot of times it's not even negotiating; it's more around educating around what the platform is, and what our vision is, where we're going, and how that value is calculated and ultimately going to be extracted for them when some sort of liquidity event happens. So that's a few weeks, and then diligence, depending on size and scope of the business, could be 75 to 90 days to close, right? We try and speed that up, but there's a variety of factors, right, that go into that.
Yeah, so, I agree.
Again, our motive is we want to do it right. We don't want to do it fast. I think the business owners are still trying to run their business. Going through diligence is burdensome.
Right?
And so, we want to buy a thriving business, not one that's kind of boggled down with diligence, right? So
no, I appreciate your saying that as well. I mean, I've seen the process getting off the wheels when it gets too accelerated and puts a lot of pressure on the seller.
Right. There's a sweet spot, right? You don't want to take too long, right? But you also
don't want
need
to lose momentum.
Absolutely.
Agreed. Let's talk about hard factors versus soft factors. So hard factors are the financial metrics, and the operations and the machinery of that business. And the soft factors are things like customer satisfaction, employee satisfaction, and getting engaged for that. Probably both important. How important?
Yeah, I would say the story, all of it goes to the story, right, of the business and the level at which it's operating. I would say equally important. I mean, I think the financial picture, you can kind of dissect that, right? I don't want to say quickly, but you can understand, I would say worthiness to continue relatively quickly. Whereas some of those soft factors that you mentioned, right, maybe require a little bit more time and a little bit more understanding of the delivery mechanism in place, from a day-to-day, and also from like a VCIO service or a consulting service, because that goes to how sticky those customers may be and the value that's being provided, which we're looking to grow those relationships, retain and grow those relationships. So very, very important.
Would you run your own third-party sort of discrete customer satisfaction survey on a company that you're acquiring, or would you rely on something that they run themselves?
I know it's pretty common. There's a lot of third parties out there. We have done that in the past, but we also do request, whatever customer satisfaction information they have
to share that.
We also do mandate as part of our diligence visiting clients prior to closing. Right, so we can get kind of a firsthand feel from some initial meeting, but that's later in the closing stages of diligence.
Of course, from the time that you do the acquisition to the time that it is quote unquote fully integrated, right? How long does that time frame look like? A and B, I'm assuming it's a gradual process, and then that communication with the clients has to happen through that process. But walk us through what that feels like.
Yeah, absolutely. 9 to 12 months, and then there's still things that may go beyond that for the operations of the business, right? And again, I think similar to the timing that we had discussed before, there's a sweet spot, right? Like the timing of diligence, there's a sweet spot to the timing of integration, because that business needs to operate. You want to minimize disruption, but there's also, you don't want to take too long, because then you don't want things left in ambiguity around systems and process, right? And that creates other noise. And so it's something we're constantly evaluating as part of our integrations team. It's very iterative, and it's multifaceted, right? I think first approach is we do our announcements, we work with the staff, make sure they're comfortable. That's the most important asset of the business, right? And make sure that they're comfortable. And then other things like, there's branding, right? Systems, customer engagement, which happens later in the process because we're not aggressively coming in and trying to engage. We have a full communication plan to announce and talk about some of the benefits of what this could mean for them and their users. But again, it's very iterative and it's gradual.
Are you PSA agnostic?
Yeah, I mean, we are a ConnectWise shop on the PSA, but we also leverage a lot of Kaseya products.
Okay.
So I think the tech stack for us, albeit important in terms of an operational maturity level and assessing the business, is less significant of a factor than some of the other things that we've talked about.
You mentioned the word operational maturity. What do you think that means?
Yeah, I think it's a great question. I think it means, documented processes, clearly defined roles with accountabilities. Account management is a core competency of a business. How do you engage? How do you manage that customer relationship? And ultimately, does the customer have an IT roadmap, right, that is being followed, and some way of quantifying, right, where they are on that IT journey? I think goes to the level of maturity, and that's on the service side of the business, right? But operationally on the back end, I think you got to know your numbers, right? Like you got to be running your business and understanding your margins and what are those drivers, right? And be able to tell the story of why or where you're going with those drivers or those levers on how you're going to be managing that moving forward. So those are key factors.
Yeah. Okay. You're a great example of someone who stayed on after the acquisition happened and found yourself a great role in the firm. Is that a typical path, or is that a path or an option that is open for someone coming into the VC3 ecosystem and they wanted to have a legit career after the exit?
I think, yeah, absolutely an option. I think that, we get a commitment of, 12 months, right, to get through the integration, and we commit to working through to find a home, right? We're 750 people, 50 plus open job openings. I think we want to get to understand what the sellers and the key management, what their superpowers are, what do they love doing, what do they want to do, and chances are there's a home for them here to do something like that. We want to match, what potentially our needs are with what they're looking to continue to do and achieve. So absolutely an option, and it's something we work through during the integration phase.
Okay. Rough mix of like cash and equity. Where are you in that?
Yeah, so the typical deal structure is 70% cash at close and 30% equity roll. With your standard, holdbacks and other stuff. But that's how we prefer to structure our deals and how we've been successful. In many cases, we've had, similar to myself and our other owners, roll more than that in terms of the equity value, because we believe in that thesis and that addressable market that we're servicing and what our growth story looks like.
Okay. And in terms of the equity that they receive, is it the same class of shares?
Absolutely.
Yeah.
It is. It's the same class of shares.
Got it. I want to talk a little bit about big picture, just advice for the MSPs in the landscape and the world that we're getting into. A lot of changes happening.
Yeah.
What advice do you want to give to small MSPs that are looking to do their own bolt-on acquisition? So this is a theme that's going on in the marketplace. Every $3 million MSP wants to buy another $3 million MSP.
Everybody thinks they're a buyer. Yeah.
Yes. What do you have to say to that?
I have to say that I think that, M&A, as everybody says, right, is a skill. It's a learned skill. I think don't underestimate the level of risk and effort to your core business of integrating another business, right? And I think, trying to achieve growth through M&A, if you don't have a good organic growth engine, and trying to solve that problem through M&A is not a great strategy, and you see it fail, more times than it's successful. So I think that, again, we always talk about what are you trying to solve for, right? And so we would encourage smaller MSP owners to think about what are they trying to solve for, extract value. There's different paths to creating more value. You could roll some equity, sell your business, roll some equity, and you can create more value than you could potentially be trying to acquire, other businesses, right? So I think that's really important to consider.
Very consistent, by the way, Kyle, what you said with what Ben said to me on this question.
Oh, really? Oh, yeah.
Yeah, I asked him the same question. I asked him the same question.
Yeah.
He gave me
Ben's
pretty
a
much
sharp
the same
guy.
answer. Yeah.
Yeah. And I think most platform MSPs, right, who these, we're serial acquirers. We've gone through a lot of acquisitions, a lot of integrations. We'll tell you, like, this is hard work. Integrating a business is hard, right? And if you're a smaller business without a dedicated team to own it and drive it, the likelihood of success is really low. And I think that it could be more damaging to your core business, right?
Yeah.
So, and I think 9 out of 10 guys in our space, and girls or women, would say that, right?
Yeah. I've had MSPs who have done this, who have been burnt by it, who've said that it didn't go well with them. Yeah.
Look, we originally wanted to be a buyer when we went to the market, right? We were originally looking to buy $1 to $2 million MSPs, and we thought, candidly, oh yeah, we can integrate them, right? And now being on the other side, I think that we greatly underestimated that level of effort and potential risk to do that.
Energy, time, resources required, and also away from your work. Your day job. Yeah,
absolutely.
For MSPs who want to exit in the next couple of years, right? What should they be thinking about right now?
I think, we touched on it earlier. New logos will drive the value. And the second thing I would say is understand what the buyers are looking at, right? Like when I'd say, again, nine out of 10 of us would probably run the same level of financial analysis on a business. We'd probably come up with a relatively similar valuation of the business. And that's based on, a lot of the things we talked about, right? Like understand your retention numbers, understand your concentration numbers, understand, right, your agreements, right? And so really understand the lens at which a buyer would potentially look at your business, right? And start working to drive those things, particularly, right, margin, retention, and your seat prices.
Got it. Okay. From a market and competitive landscape perspective, right?
Sure.
What is a risk that the IT world is underappreciating?
Great question. Well, I think, cyber, our CEO, Ryan, always says this, that today is the safest day it's ever going to be, right? Nowadays.
That's a great quote.
Which resonates with us. And that's how we run, right? That's how we service. The cyber landscape is only getting more complicated, more complex, and more advanced with the onslaught of, AI, right? And all of these other things. So I think that's, and I don't think it's underappreciated in the market,
right?
But I think it's probably the greatest, right, potential risk.
Yeah.
And that also drove our owner. One of the reasons he decided to sell, right? There's only so much, that we felt confident we could protect our customers, right? Customers we had relationships with for 20 to 30 years. So then when you can team up with a larger organization that just has more scale and more resources and more technology, to kind of work to mitigate that risk.
Game is just going to get harder.
Scary stuff.
It is, and then there, and these things are tied, but along with this is going to be, I bet, more regulation in terms of what the responsibilities for MSPs and then knowing what those responsibilities are, number one, and number two, fulfilling those responsibilities, right? On a dynamic basis.
Absolutely. Yeah. We embrace that. I think that the market needs that, and I think that if you're a city, a town, a healthcare practice, a lawyer, how is somebody certified to be your IT provider, right? I think that's definitely something our industry needs and is long overdue. I think the benefits of that will be great, not only for the businesses and for, businesses like us, but ultimately the consumers out there, right? That they're buying and, they're getting services and goods from all of these other businesses. And you want to make sure, you want to feel confident in their practices and processes, that they're safe and protecting your data, right? And doing all of the things that they should be.
Yeah, so many federal and state privacy laws that are,
it's complex.
Absolutely. AI and its impact on the MSP landscape. I mean, its impact on everything, but on the MSP landscape, I have heard variations, but basically people have said, well, AI is going to be transformative, but it's not going to replace the human being. So, it's going to play a role in the way in which MSPs interact. And I've also heard the other side, which is it's just going to completely change the MSPs. The MSPs are going to look completely different because of AI. Where are you on this spectrum?
I think there's layers to that. I do think it will, and it's already proven. We've looked at businesses recently where they have, some MLM technology or RPA technology, and there's products coming to market around that to improve, some of the service or some of the noise around alerting and tickets. And so I think there's value depending on the layer in which it's used. Is it going to be transformative tomorrow? No, I don't think so. I think it could be, right, in the long run. As MSPs look for ways to extract more and more margin, adding in some AI components to, again, address some of the noise that the body is monitoring or managing, is what we're seeing more and more of.
Yeah, that makes sense. And the other piece of this I also think is that it also reduces, in some ways, it reduces the error of the process, because manual processes can be error prone. So it might reduce other errors, but it does have the advantage of creating some standardization and reducing some errors as well.
Absolutely, I think you bring up a good point. There's could be unintended consequences. Right, depending on how it permeates the business.
Yeah, in the next couple of years, several PE-backed MSP platforms will be coming to the market. Right, it'll be an interesting time because we'll see for the first time a realization of how successful the strategy was for this first vintage of MSP platforms. What will you be looking for when that happens?
Well, I think, was the thesis, right? Did it play out the way we expected it to play out? And I suspect that it will, given the time horizon we're talking about. And I think you've seen a lot of this activity too in the last year and even this year, and going into next year. There's quite a few platforms on the market and going to market, and so we're all sitting back watching that, right, with big eyes to see where they end up trading, and ultimately, what that next level looks like. So continued growth is what we expect, and continued growth is what we're all achieving. And I think it's a positive sign that it's a competitive landscape, right? I think that's a positive sign for everybody involved.
Yeah, Kyle, thank you so much for joining me on this great conversation. I really appreciate it. You're answering my questions, and look forward to meeting you at the next conference.
Sounds good. Thank you so much for your time.
Thank you so much.